Did you get a tax refund this year? Are you going to get one this year? Before you impulsively spend it, we have some ways to put that money to good use. Financial planner Michael Neuenschwander from Outlook Wealth Advisors is here. He's going to help us think differently about the tax refund. I mean, it is our money, Michael. We got to get that straight right off the bat.
Most
a lot
definitely.
of it's like, oh, this is a bonus. It's free. Wait, this is your money that they took throughout the year that you're getting back now.
And you gave it to them with no interest along the way. So
yeah, how nice are we? No interest loans to the government. Are we good or are we good? Okay, Michael, thanks for being here today. We've got 4 things we're going to go over on ways to use this tax refund, assuming you're like the average person who's getting the average refund, which is about $3,000?
About $3,000.
Okay,
yeah.
so let's go through some of these ways to improve our finances with our own money because we're getting the loan back from the government. First one you say is to pay off high interest debt. Why is that so important?
Yeah, well, like you said, I mean, there's no shortage of people or places wanting you to spend the money, but average credit card rate, because interest rates are so high, is around 20%. So before you just go spend the money, the reality is if you've got debt, credit card, whether it's still a student loan or even an automobile at 8, 9, 10%, you'll do yourself a huge favor to knock that out first, and frankly, you'll get yourself more money in the long run when you don't have that giant monthly payment at 20% stacking up against you.
It's crazy how much the interest payments will really come out of our cash flow, right?
That's when we look at the big picture. I mean, that's one of the things we're telling our clients when we say, how's the economy doing or where's it going to go? Well, if people don't have money to spend, that doesn't bode real well for the future economy picture there either. So paying off that debt's a big one.
So we can really get ahead of some loans if we make wise use of our tax return. Your next suggestion, let's pretend now we've got the high interest debt paid down or paid off. We want to build our emergency fund. Why is that so important?
Well, again, it says, unfortunately, that same sort of average American scenario says, people, if they had a $1,000 unexpected bill, auto repair, home repair, a lot of people don't even have enough in savings to cover that. They'd have to put it, again, right back to the credit card or go in debt to do it. And so we generally recommend people try to have 3 to 6 months of emergency money set up. So whether you unexpectedly lose a job or whether it's a health issue and you can't work, but again, that emergency fund keeps you from having to go right to the credit card or get in debt just to be able to get by for a couple of months.
Yeah, I mean, it's nice when you have it if you need it, but ideally you don't want to. When you say the 3 to 6 month, if we're going to set that goal, are we looking at total expenses? Am I looking at whatever my gross either salary or hourly wages? Am I looking at just the expenses? What's that specific number we should look at?
Yeah, so unfortunately a lot of people focus on, well, here's what I make, but that's not the most important number. The number is, what do you actually spend? And you can even look farther and say, what do I have to spend? Versus what's the nice stuff, like my Starbucks and going out to eat and that stuff. And the goal for that 3 to 6 months is let's focus on the stuff, if you were really in a bind, what is it you have to pay?
Yeah, if you lost your job or if some medical issue came up, right?
And even farther, I mean, some people are a little different, meaning we work with people that are retired, but also people that aren't retired, sort of planning for it. Yeah. Well, if your income is coming from a pension, coming from Social Security, areas where you really don't have to worry about that money stopping, then you can probably get by with a little less of an emergency fund. But if you're in an industry like oil and gas, that is cyclical and sometimes goes through layoffs, you probably want a little bit bigger emergency fund in that case.
Yeah, very good point. Everybody's so different. The third thing on our list is to cross things off the list. So what would a to-do list look like where it's like, hey, this is important enough that we should use the tax refund for it?
Well, and here's where you can say maybe you begin to get to have a little fun. If you've had some things on the house that needed to be repaired, or we were looking to upgrade things a little here and there, which says it's okay to go ahead and spend that money, particularly in areas where you may say, well, we may actually see some of it back, like certain home improvements, not all, but it says you retain that value, or if it's upgrading appliances where they're more energy efficient, so it saves you some money in the long run in that area too. And in fact, some of those upgrades may actually get you another tax refund for this next year as well.
Yes, you got to be careful. I mean, there are definitely incentives for various things, whether it's solar or some of these other upgrades.
Yep, solar, more efficient AC units, which we can all appreciate around
Windows,
here.
right? Things like that. You just got to check, obviously, with someone like you who's also a CPA to make sure that what we're spending the money on, we will get some of it back, if that's the intention.
Correct.
Because sometimes we just want new blinds or whatever the heck
that
it is.
doesn't count.
All right, let's go to number 4 here. We've paid off some debt. Hopefully we're building a fund now. Maybe we've made some home improvements we want. Planning for the future. Because, hey, man, we never know.
Well, here's where things can actually get exciting, or at least from a CPA and a financial advisor, exciting. So as we kind of touched on, I mean, that money is your money to begin with. You just gave it to the government, now they're giving it back to you. If you're consistently getting refunds, you may turn around and look and say, let me drop my withholding in the first place so I actually get that money every month instead of giving it to the government. And if you're in the ability, which is, let me actually put some of that into my 401k. I can bump that up for future savings. Or you can do what's called a Roth IRA, which is actually really nice, where it's you put the money in and it's tax-free for the rest of your life. So here's a quick little lesson. If somebody's getting, let's say they're getting $1,200 back, rather than just spending that $1,200, they could use that money to move $10,000 with no extra taxes from their IRA to a Roth. And now that $10,000 grows tax-free for the rest of their life, their spouse's life, and under current tax law at least, 10 years for the kids too.
No kidding.
So,
and the key point is current tax law. Things are always changing, so folks need to check in with their CPA along the way to make sure they're still making the right decisions.
Yeah, because we know the current law we're all benefiting from right now expires in 2 years. So again, this is an opportunity for a lot of people. If you're thinking and planning ahead, there's some pretty smart financial and tax moves you should be getting with your advisor on certainly over the next couple of years here.
It's the time to do it. All right, Michael Neuenschwander, certified financial planner with Outlook Wealth Advisors. Good to see you again, Michael. Thanks for coming in today.
You too.
Really appreciate it.